Welcome to Target Market Insights, the multifamily and marketing podcast. Each week, John Kasman interviews multifamily and marketing experts to teach you how to find the best places to invest, attract investors, and grow your portfolio. You are listening to Target Market Insights with your host, John Kasman.
Welcome to Target Market Insights. I'm your host, John Kasman, and I'm super excited for today's episode. Now, before we bring on today's guest, I want to make sure you take a moment and leave us a 5-star rating and review if you're enjoying the podcast. The reviews really help more people find the show and allow us to get great guests like the one we've got today. Today, we're going to be talking to Michael Blanc. Michael's an entrepreneur through and through and passionate about helping people become financially free with real estate investing. Now, he's the author of the Amazon bestseller, Financial Freedom with Real Estate Investing, and he's the host of the popular Apartment Buildings Investing podcast. Now, he's helped investors purchase 5,000 multifamily units valued at $215 million through his content and training programs. And as the CEO of Nighthawk Equity, he controls over $75 million in multifamily assets all over the United States. With that said, let's welcome to the show, Michael Blanc.
Hey, John, what's going on? Glad to be here.
I'm really excited to talk to you. Thank you for coming on the show today. As we were, talking kind of off camera before we hit the record button, I mentioned how instrumental you've been in just really helping me really educate myself. And I know many other people with all the content that you've put out over the years. Before we jump into some of the content and some of the platforms that you've created, I would love to hear a little bit more of your story as far as how you even got into multifamily to begin with.
Yeah, I'm kind of consider myself the crash test dummy of financial freedom. When I read the Purple Book in 2004, it really changed my life as it did for many people. And it first ruined my life, frankly, because when I read the book, I was so shocked I thought I was a pretty smart guy at the time. And I had a pretty good job in the software industry. In fact, I just had a bunch of money put in my pocket through because our company went public. And then I read this book and I was like, oh my, it really confused me. Finally, after like 3 or 4 months of like going over this, I was like, dude, I got to quit my job. I got to pursue financial freedom. And I decided to take my entire net worth for this quest of financial freedom. And I just tried to do everything at once because I could. I quit my job and I was like that because I had money in the bank. I had this runway. So I kind of did everything at once. I flipped a house. I took an apartment building boot camp. I learned how to trade stocks and options. I don't know. What else did I do? I negotiated some short sales. My big idea, though, John, was restaurants. Okay, it's kind of checked off the cash flow bucket, and it's because I was surrounded by some restaurant franchisees, and they're like, "Oh yeah, it costs this much to open. You hire a guy, he runs everything, and you sit back and count the cash flow." And I'm like, "Sweet." So I was like, "This looks good." That's exactly what I did, and I hired a guy, super experienced restaurant guy, and I funded it, and it worked great. Literally, it worked great. It did exactly what I thought it would do until the recession hit. And then things didn't turn out so great anymore. And long story short, I subsequently lost my IPO millions in the restaurant debacle. Plus, I added a couple $100,000 of debt and credit cards on top of that. Almost lost my house. And then almost went back to getting a job. And I was like, I had a conversation with God. I said, dude, you got me into this mess. There's no way you're making me go get a job again. What else is there? And I was like, oh, I know, real estate. I flipped a couple houses and made pretty good money. Let me flip some houses. I didn't have any money at the time. And so I borrowed money, 12% interest, 6-month note. And I was like, oh, that's pretty cool. Let me do that again. And so we did it again and started buying 2 houses every single month. And we flipped like 3 dozen houses. And I made money too, which was great. Helped me get out of the hole I was in. But the problem is it was a lot of work. And when I look back on my, Purple Book, I'm like, damn, this doesn't seem like financial freedom to me. Something's wrong. What is wrong here? I was like, I know. Instead of selling all the houses, I'll just keep them as rentals. I'm like, oh my gosh, that means I gotta buy 50 houses to generate like $10,000 a month in income. I was like, dude, that's insane. Meanwhile, I had gotten into this 12 unit kind of like on the side. I did a lot of apartment building investing in 2007. This was like in the early days, about 9 months, where I kind of created a syndicated deal analyzer and I put it on ice for like, I don't know, 3 or 4 years. And I kind of dusted it off, got into this 12 unit. It was a complete mess. And after about 18 months, it kind of quieted down. And then it was just kind of sending me this mailbox money. And I was like, daggone it. That thing is just boring old mailbox money. Why don't I do more of that and less of this exciting house flipping stuff? And that's kind of when I shifted. And what I realized, though, at the time is that while I was a crash test dummy, I had failed a lot, lost a lot of money. There was actually a lot of lessons in my experience. And that's when I started blogging about it on my own blog. On Bigger Pockets, I started blogging. And people was like, well, how do I analyze deals? I said, well, I got this analyzer over here. Let me just polish it up and send it to you. And I was like, oh, that's pretty cool. I was like, well, maybe I'll just slap some video around it. And the syndicated deal analyzer was born. And it's kind of one thing led to another. I found that the more I shared with stuff, the more people were interested about raising money, about getting into multifamily. And after doing this for so long, not only did it work for me, but in talking to other people on my podcast and then teaching people, I realized that you could bypass all that stuff, all the single family house stuff of any flavor whatsoever, and go right into multifamily. And you could do it. You could literally quit your job within 1 to 2 years, and all you got to do is do one deal. Like that's why I talk about this law of the first deal all the time, because that first deal, like it's like a switch in the universe flips, and the second and third basically happen automatically. Like you'd have to exert more effort to do the second and third than you did for the first one, and that makes it a very powerful thing now, because now I can say, well, shoot, you want to quit your job with real estate? Okay, I got it. A multifamily, all you got to do is do your first deal. I don't care how small, just do that. Do that, and it'll take care of itself. And that just got me very excited about the mission of financial freedom with real estate, but maybe not in the way people think, which is single family house investing.
No, I love your story, especially when you talk about, overcoming that failure, right? I mean, having that triumph, you get all this money through the IPO, you quit, which is kind of crazy, but you had the runway, like you said. You had the money in the bank. You weren't really worried about the finances. So it was a great time to go out there, try to build some businesses, try some different things, see what works, and go. And, you kind of failed with the restaurant, which I want to come back to for a moment.
Please
but
no.
Then you, right. But you really focused more so on real estate and coming back to real estate, doing the single family stuff, and recognizing that, you know what, this is a lot of work. This is not the vision I created for myself. I really wanted to be more passive, coming back. And at that point, thinking about that 12 unit and focusing more on multifamily. So let's go back to the restaurant piece, right? Because you said it was working well. You had a guy who was great at his job as far as running the restaurant, and everything looked like it was going well. I know the economy was the big thing, but what are some other lessons you took away from that experience that have helped you when it comes to multifamily investing?
The restaurant business as a whole is not sound. It's not sound. It's got fundamental flaws, unlike various other businesses such as multifamily commercial real estate. It's fundamentally sound for a variety of different reasons. First of all, you have to, if you can do a franchise, it has to be a good franchise. And I can go on and on about what I think that means. The good restaurants, by the way, are not franchises, they're corporate or semi-corporate restaurants. And what the way they stay in business for long periods of time is by innovating constantly, which means they're reinvesting in themselves. And franchisees are just trying to look to pull money out. They're not reinvesting in themselves. So even if you have a successful restaurant, which is a big if, you got about a 5-year runway until a new restaurant opens up across the way and people start going to that and not to you. So the recession kind of accelerated the demise. What happens if the concept was not strong enough to really survive in the new economy? In this case, this was pizza. And people didn't want to pay $25 for a really awesome organic pizza. They wanted to pay $9.99. They wanted 5 toppings on it. And I don't care how good our pizza and how good for you the pizza was, it just never survived that kind of market. So that was probably lesson number one, is the fundamental business was not recession-proof, number one. And number two, it didn't have a long-term resiliency outlook. And so that was a fundamental flaw with the restaurants. Other than that, I did set it up relatively passive. I had a guy running it, and there was a period for like 2.5 years I didn't even go to my restaurants anymore. It was great. Now, that's the other problem. The other lesson is there is no real investment on earth that's truly passive, nor should there be, but there are degrees of passive income. I mean, even if you're investing in the stock market, like 99.9% of people are doing, they don't watch it at all. They just give their financial advisor just a bunch of money. They have no idea what's going on. That's bad. Oh, look, I'm passively invested. Yeah, but you don't know what's going on. So no one should be truly passive, 100% passively invested. They have to at least engage with their investment and better understand it.
No, great tips there. And you said 2 things that I think really stand out. One is the restaurant business was not recession proof and it wasn't as resilient. So when there was a shift or a change in demand, you really weren't in a position to counterpunch and react to that. And then also for yourself, being really hands off, being passive, you really weren't in control or in the position to pivot maybe as much as you could have, or if the business was a little bit of a different entity. I want to take that and talk a little about multifamily, because right now I think we're in a similar place where that recession, that resiliency is starting to bubble up in a lot of conversations with most investors. How are you looking at the market today?
Yeah, I mean, we're all waiting for the recession to happen. However, there's no one that I'm talking to that says, oh, the recession will happen because of X, Y, Z. Like, no one knows. All we know is, hey, we're overdue, so therefore it must be just around the corner. But there's really no fundamentals that are pointing to a recession if you think about it. Be that as it may, we have to go in there with the eyes open that we are overdue with a recession. There's got to be a correction. Natural forces must clearly take their course. So therefore, we must be somehow prepared for this stuff. And so one of the things I love about multifamily specifically is how it behaved in the last recession, which was arguably probably one of the worst in history. But the default rate, for example, for single family houses for Fannie Freddie government loans was 4% of all single family houses were lost to foreclosure. That's insane. Comparatively, multifamily was 0.4%. And that included knuckleheads who bought, 3-year ARMs without cash flow, right? So if we take the knuckleheads out, the default rate was almost 0% in multifamily. I like that a lot. Now, did vacancy go a little higher? Yes. Did rents stall, perhaps? Yes. They didn't go back much, though, unless you're investing in Class A, which we don't do. So I just really love the way that multifamily specifically performed. There's other what I call recession-proof assets like self-storage and mobile home parks. Not my style, but I do love those. Light industrial, I don't know much about that. But those are some of the things that when I look at now, before I was just like had happy ears on. I was like, what can possibly go wrong? We're all going to make money in, eternity. But now I'm constantly thinking, what can go wrong? And if looking at the business as a fundamental, that's what I love about multifamily, because even if there were to become a recession, not only are we going to survive that, we're going to have cash flow while we do it, but we're all going to thrive through it because we're going to buy everything in sight while we're surviving and thriving in the assets we do have. So I really like that a lot.
No, that's a great point. And I love the way you talked about how recession-proof it is, in the sense that, when you look at the Fannie and Freddie loans, less than 1% defaulted. You're talking 0.4% loan defaults for Fannie and Freddie backed multifamily investments. I think that's such an important and powerful point, that if you underwrite the deals the right way, if you're conservative in your numbers, and if the government backed loans think it's a great deal, there's a pretty good chance that you'll be able to weather whatever storms come at you. And I think that's the thing that is really powerful. And people talk about, the cap rates are compressed, or it's hard to find a deal. And I think part of the reality is that as people like you and I and others who have found and discovered the power of multifamily, as we see this as a great investment, Paul Moore talks about it as the perfect investment. As we look at it as that, well, we're not going to run to other asset classes just because, I think that we feel comfortable knowing that we can, get through any kind of recession. We feel great knowing that there are tenants who are going to need the properties and need homes to stay in. And as long as we can underwrite conservatively, we're going to be in a great position to weather any of those storms. Michael, I think the biggest fear for most people looking to start in real estate is, especially when it comes to multifamily, is, well, what if I mess up, right? What if I mess up with my numbers? If I completely miss something in my analysis? We started talking a little about the analyzer that you created. You've helped so many people underwrite deals over the years. What do you look at? What are those core common mistakes that you see people make when it comes to analyzing multifamily investments?
Yeah, I mean, it comes on multiple levels, really. You just got to peel back the onion. One is I don't have the tool to do it, and we do have the syndicated analyzer to do that. And it is literally the most commonly used tool now on the market, because it makes it very easy to answer the question, what's the most I can pay for this and why, and within 10 minutes. And it allows you to do very complicated things very easily. So you need the right tool. But even if you have the right tool and you know how to use it, doesn't mean that the numbers are actually real, right? There's plenty of people who are great at underwriting, but they make stuff up. No, the rents are under market $100, and the cap rate at exit is going to be 4%. I can make stuff all day. I can make my projections look really good in Excel. I don't care if you have a great tool like the syndicated deal analyzer. So the next mistake people make is they make stuff up. They don't really actually research the numbers behind them. And a great source for the right information is obviously your property manager, which is why the property manager is the most important part of your team long before you even put a deal in a contract, because they're going to help you with rent projections. They're going to help you with due diligence. They're going to help you with projecting expenses. They're going to help you do all these things, right? And so the actual underlying assumptions, how real those are super, super important. And then again, you peel back the layers. It really depends on you and how much support you need. There are people who can, the next step is education, right? So the syndicated deal analyzer comes with videos, but you do need to educate yourself. It's like you do anything meaningful new in life. I'm going to take a motor apart. I'm going to fix this motor. Well, I could experiment on this motor and I might have several screws left over by the time I put it back together, meaning it probably won't run. Or I can take a class from a mechanic and learn how to do it. So it really depends. My advice always is go educate yourself, and it's not super expensive. You do have to invest in yourself. I have courses. Plenty of people have training seminars out there. Invest in yourself. And then it depends a little bit on you and how much support you need, right? So clearly, if you can afford to hire a mentor, my gosh, you're gonna avoid the expensive mistakes and accelerate your outcome. Though the investment goes higher when you're working one-on-one with a full-time syndicator, that's going to be, the investment is going to be higher than if you can. So if you can't afford it, then obviously you can't. You're just going to have to make it up through hustle, grit, and learning from your mistakes. But those are kind of the layers, right? The layers. It's really the tools, the education that you have, and then possibly the ongoing support if you're in a position to do that. At the end of the day, though, John, at the end of the day, you just got to do it, right? There's plenty of people, all they do is they hop from one book, from one seminar, and one coach and that. And you're like, at one point, you just got to do it.
Yeah, I mean, that's it, right? I mean, the tools, the education, getting a mentor is such a phenomenal, powerful way to accelerate your growth. I like to say mentors are not magicians, though, right? They're great for education. They're great for, showing you the roadmap. And, I think even when I started out, I don't know, maybe I don't want to call it egotistical or anything like that, but I felt like I was smart and savvy enough to figure it out that I didn't need to pay a mentor to tell me some stuff that he knew or did. I could watch what he was doing. And I would say that I did end up hiring a mentor, and I would advise most people to hire a mentor. I think the key, though, is you need to hire a mentor when you are clear on what you're trying to solve. I think some people hire a mentor and then realize they don't even like multifamily, or they don't even want to be a syndicator. It's like, well, you just spent like all this money and you just realize you don't like it, right? But I think if you go through the process and figure out where are you struggling, where can you get help, and find somebody who's got the experience and the ability to coach and help you navigate through it, I think that's very powerful. The other thing is the network, right? I mean, to be able to tap into a powerful network, and I know, with what you have going on, especially with a Nighthawk, there's an opportunity where, if someone's able to find a deal, they can kind of bring it to you guys and have some of those concerns alleviated. So really understanding the value of a mentor or any education platform, but just really doing a little bit of self-reflection, figuring out what's missing from you, what do you need to accelerate and progress and move yourself forward, and then figuring out the right solution. So I would definitely ask anyone, and I don't care how experienced you are, if there's something that you could be scaling or growing, you should think about at least bringing in a mentor, finding the right people in your circle who can help you move forward. And Michael, you've done that for so many people. I think it's a great testament to the amount of work you've been able to do over the years.
Yeah, absolutely. And I always say, find someone that you resonate with. And there's other people like me that teach multifamily, right? Find someone you resonate with. And everyone's a little different, right? And then just go deep with that person. Go deep with that person, because we all have training, we have mentoring, we have events, and we have these communities, and they're fabulous, right? So that's my advice, is just connect with someone. Go deep with them.
So a lot of people are looking to raise money for the deal, right? And that's one of the big drawbacks many people have. You talked about the importance of that power of doing the first deal. Well, the obstacle for some people is, well, I don't have all the capital to do that first deal. So they turn to either JVs, partnerships, apartment syndication. I want to talk a little bit about raising capital for deals. First of all, what are some of the major mistakes you see syndicators or operators making when it comes to trying to raise money for deals?
Well, it depends. Or have you, this syndicated operator, have they raised money before, or they have raised some money before? Which kind are we talking about?
Let's start with someone who has not raised money before.
Yeah, the biggest thing for someone who's not made money before is this. It's typically a mindset thing, and it's typically something that goes like this: I don't know anyone with. I don't have any money. I don't know anyone with money, and I certainly am not gonna ask my friends and family for money if I would do that. Right? That's typically the mindset issue, and it's all mindset. It's all a myth. It's all fabricated. Right? We're talking about things that are not real, things that are actually not really things. They're just made up things in people's head. It's actually surprisingly easy to raise money, and I didn't realize that until I started doing it with the single family houses. Now it's a little bit differently on the multifamily, but check it out. I mean, we have, in my opinion, the best investment vehicle on the planet. Because if you talk to someone who's invested in the stock market, they got several problems. First of all, they can't really predict the future. How can I make a financial plan for the next 10 to 20 years with what happened in 2008? The volatility. Like, I can't plan. Number two, I don't have any cash flow from my investments, right? So I can't quit my job. Well, that sucks. And I'm paying taxes on top of that. So you come and say, hey, how's the stock market treating you? You're like, well, I don't know, not that great. You go, well, I got something else for you. He goes, what? Well, it provides consistent above average returns. Oh, that's cool. And it provides cash flow while you own the investment. Oh, wow. And paying taxes. And I'm like, what? Like, dude, is this legal? Are you selling drugs? What's going on? Right. And so what I'm saying is a lot of people think that they're begging for money when in fact they're not. They're providing a service. In fact, you withholding this knowledge about multifamily, you're actually holding back. You're doing other people a disservice. You're basically, you're selfish. That's what you are. You're selfish. And so instead of saying, oh, I'm going to beg for money, you're actually doing people a favor. And, to think about taking friends and family money, you shouldn't lose anyone's money, whether it's your friends and family or your coworkers or someone you met at your real estate meetup. You shouldn't lose anybody's money. Okay. So it doesn't really matter if you take this kind of money or that kind of money. You're not going to get in this business without the right education. We talked about that before, with the right kind of support of some sort. And if you have that, you're not going to make the kind of mistakes where you lose your shirt. Now, are you going to make mistakes? Yes. Okay. Welcome it. I made mistakes, but what I'm finding is even if you make a mistake, the wondrous thing about multifamily is that it just fixes itself. Like, I know the market's been going up the last 4 years, but even back when I was, when even people before or after, when they get in these situations, even in a flat market, multifamily just tends to fix itself over a while because it's a stable asset that produces cash flow that gives you time to fix the problem. And once you do, it then accelerates and everything's fine. So even if you do have issues, it's okay. And here's the thing about the first deal, John, as you know, the value of the first deal is not the money you make, but it's the inherent value of the first deal. In other words, that first deal, the leverage of that first deal is much more valuable than any money you could make. So theoretically, because of that law of the first deal, so theoretically, even if you make no money in that first deal, it's still going to kick in the second and third deal, which are subsequently larger. And so the value of that first deal, regardless of how much money you make or not, is unbelievably valuable.
Yeah, great tips there. I love how you talked about the mindset, right? Especially for that person looking to raise money for the first time, because that's the reality. I mean, that's what a lot of people think. Oh my goodness, I don't have the money. I don't know anybody with money. And if I did know somebody with money, I'm not going to ask those people for money, right? And I think that's a hard thing for people to overcome until they do that first deal. Just to go back on that point, for someone who maybe doesn't have the experience, maybe that's really what that hesitation is that they don't have the confidence in themselves to be able to execute and deliver. They have this idea, but they don't have the track record of doing multiple deals or things like that. How would you talk to them about, what they need to do to prepare themselves to do that first deal?
Yeah, I mean, I thought that I needed years of single family house experience, and that's kind of what I did, why I did. And everybody's like, well, look, why don't I buy one house per year for the next 10 years, and I'll take my experience and my cash that I make, and I will move into to multifamily, which is the advanced investing. It's not a bad plan. It's better than most everybody else in America, but you don't need to do that. It's surprising how you can become you're taken seriously by brokers when you call them without any of that. In fact, it doesn't serve you at all. I used to call brokers in 2007 and say, hey, I flipped 3 dozen houses. They're like, yeah, but how many multifamily deals have you done? I'm like, well, none, but look how many houses I flipped. And I got no credit at all. Versus what we teach people now, within 60, 90 days, if you educate yourself and you're using the right language, and you built a team around you, and you call a broker and you say, well, I'm working with property management company XYZ. I'm working with a group of high net worth individuals. Do you have any questions? And they're like, yeah, all right, here's a couple deals. Versus you calling up a broker, hey, my name is Michael. I'm a real estate investor. What deals do you have? And they'll go, hey, Michael, how about you send me a proof of funds and I'll send you what I got? And I'm like, I don't have any proof of funds. So in other words, you can overcome your apparent lack of experience in extremely short order without spending years investing in single family.
No, great tips there. I love that information. I want to go back to the syndication, right? Because you've done such a great job with all the education and helping to educate people on how to create online platforms. First of all, you've done it. Can you explain exactly what an online platform is and why syndicators need to be doing more of this?
So an online platform is important as you start to scale. Okay, so imagine someone who's raised a little bit of money, $250,000, $500,000, and typically the way you start raising money is one-on-one, right? Word of mouth, one-on-one, and that's how it starts, because then you know what to say, how to address objections, who kind of your investor is, and that's kind of how you start it. Now, when you get down this road and you've raised some money before, you kind of say, "My gosh, how do I scale this business? This is working great. I just got paid from an acquisition fee. I'm getting cash flow. Woohoo! Now, how do I add a zero at the end of what I'm doing?" And when you then try to add a zero after the kind of meetings you've had up to this point, the number of meetings you've had, the phone calls you've had, you're like, oh my gosh, I can't meet enough new people to scale this, right? So imagine having raised, $500,000. If and it took me 18 months to get there. That's great for you. I've done a couple deals, raised $500,000. Maybe I partnered with an experienced operator. Good. And now they're having this conversation in their head. And they can't, okay? You can't meet now with 500 investors to get to $5 million in 12 months. So their question is one of scale. Now, if they haven't raised money yet, some people are already thinking right out of the box, how do I go big? I haven't raised a cent yet, but I'm going to go big next year, right? If you're thinking that, the way to do it is with an online thought leadership platform. Online thought leadership is more than a website. It's a way to, it's a brand, number one. So it's like, who are you? What's your brand? And the brand really attracts people, right? It's like you become a magnet and you repel certain things. What's your brand? Like, for example, with me, if you want financial freedom, you might be attracted to me. If you want to be rich, you might go to Grant Cardone. Okay? He's got the Bentley and the jet. Okay? I don't care about that. And people who follow me don't care about that either. So it's a brand, and I'm going to repel those who want to be rich, and I'm going to attract people who might want to quit their job. Okay, the next thing is you need a way to capture that audience. And the best way to do that is via email, right? You can do it when people come to your website. There's this what we call a lead magnet, some kind of free download, right? It's, ours, a Nighthawk is, what's the better investment, stocks or real estate, ? Right? People are thinking stocks, the conversation we had earlier, and they're thinking something's not right. Is there anything better? Oh, I heard of real estate. Oh, there's this cool report. Well, it sounds pretty cool. I'm gonna give you my email address and I'll get that free download. I'm willing to do. I'm not going to pay for it, but I'll give you my email address, and it might be the third one I'm never going to check, but just to get that download. It's okay. So great. Now I have the download, and so that's a step in the right direction. Now I know who in the giant audience I've attracted came to my website. Right? Most people, 99% of most syndicators who actually have a website, which they don't, but let's say they do, what kind of lead magnet do they have on there? They either have nothing or they have a form that says, join my newsletter. Who wants to join a newsletter? Okay, no offense if you haven't, I'm sorry. Hey, there's no way to capture it, okay? So once you capture, which is a major big step, I was guilty of this. I actually had a lead magnet download, and I sent them the email saying, here's your download, and they never heard from me again. Then we tried 6 months later to raise money for it, and we struggled to raise $750,000. This was literally like 14 months ago. Struggled to raise money. Why? Because I had not nurtured, engaged those people. They probably forgot they signed up. Right? And they forgot, and then also I'm coming out with a deal, and I'm like, "Who's this joker?" Delete. Right? So you have to nurture those people, and I kind of call that serving them. Right? So it's a lead capture. So it's attract, it's capture. Number two. Number three is serve, and you serve them typically by educating them. Right? This is kind of a new investment class, and you are serving them by educating them about this new asset class. And so now we're talking about blogs, and we're talking about YouTube videos and that kind of stuff. So that's serving. And once you serve people, you earn the right to possibly lead them. That's step number 4, lead them into a certain direction that benefits them. Now, it should benefit you as well, but it really benefits them. And what are you leading them to? You're leading them to invest in multifamily syndication or whatever the case may be. And so at one point, you're going to invite them to take the next step in the process, okay? And maybe they read some blog posts, but maybe the next step could be maybe not a live deal, but maybe it could be, hey, join my investor club. Okay, so joining because someone raised their hand going, okay, I've been on your list for a while. I want to be in your club. So when I'm in your club, I can share with you live deals because for SEC regulations, I can't just share a lead with anyone I meet on the street or that's on my email list. No, they have to specifically, there's a process to, as the SEC says, you have to create a substantive pre-existing relationship. And by joining the club, you kind of do that, right? So you have someone clicks the join the club button. Like on our website, you click the join button on nighthawkequity.com and you have to fill out a short form. And then after that, you schedule a call with us. Now, once you fill out the form, we send you a bunch of emails about who we are and what our investment process is, and you schedule a call. We can say we have now built a relationship with that person. Okay, we know kind of what their net worth is. We know what they like, what they don't like. We've had some conversations, some email exchanges, and now they are what I call deal ready. Okay, once they're deal ready and they're tagged in my system as deal ready, when I have a live deal, I then essentially lead them to take action, which in this case is to invest in my deal, right? So it's serving them, and part of serving is joining the club. Obviously, it's just another step of that. But then I'm leading them to the next step, which is to invest. So now I'll do a live webinar, and on that webinar, we present the opportunity, and the call to action is to submit what's called a soft commit. It's just a very short form that says name, email, phone number. I want to invest $50,000. That's all it is. And there's an automation sequence on the back end that basically gets them to whatever next step you're using. It could be an investor portal. It could be a spreadsheet, could be a DocuSign, whatever you have. Doesn't really matter. So the idea is, this is the core platform. Okay, once this is built and there's automations on the back end, things happen automatically. So as soon as when someone downloads your lead magnet, there's a series of automations that happen, culminating in them scheduling a call with you. So you wake up a day and you're like, oh my gosh, I got 3 investor calls. Where'd they come from? I don't know. I didn't set them. They're just on my calendar. Well, you get on these investor calls and crap, all right, then you're done. And then all of a sudden they're deal ready, right? And then what happens, 6 weeks later, you have a live webinar and you're surprised that there's 120 people on the webinar. It's like, oh my gosh, that's amazing. And then 10 people invest $50,000, right? And all of a sudden, magically, you raised $500,000 for people that you haven't actually met in person, but you've had conversations with, and it becomes surprisingly easy. This is why an online thought leadership platform allows you to raise millions of dollars in days. Now, once you have this core platform built, now you can go out into the world and talk and go on other people's podcasts or speak at meetups, right? Imagine someone a syndicated getting on a podcast, which is a major accomplishment, and you don't have that set up. Oh, how can people connect with you? Go to my website, xyzproperties.com. Well, great. The listener's like, okay, I'm not going to go to your website. It's stupid. Okay, unless I say, well, I have this fantastic report on this website, how to get free beer on a Wednesday night. Wow, now I want to go to that website and get that free report, right? So now you're taking advantage of the platform you have, and you're actually capturing those leads. And again, if you don't have the automations, you're not nurturing those people and they'll grow stale. So the sequence basically is build a core platform, and then you go out into the world and you talk about it. Okay, so now you go on podcasts. So people put the cart before the horse, and that is literally how you are able to raise millions of dollars. How I done it. How large are big syndicators that have online platforms. And what's really cool is you don't need hundreds or thousands of investors. No, you need a very small number of investors, which is really cool. I mean, 10 investors putting in $50,000, it's $500K. That's not a lot of people. And so in other words, what I'm saying is you can have a lot of very quick and meaningful results once you build a platform.
Michael, you just gave some really phenomenal bullseye insights right there. For the folks listening, I hope you were taking notes, because he just gave a marketing masterclass. I did marketing for 15 years for some of the biggest companies in the world. And even with my own syndication business, it took me a minute to figure out what was missing. And it's a lot of the stuff that Michael just laid out. I'm going to recap a little bit of it. He talked about, attracting capital first and foremost, making sure that you're in a position to capture the leads. And so many people just right there drop the ball. If you don't have a lead generation magnet on your website, or even a way for people to give you their email address to let you know, hey, I'm interested, I'd like to know more. Think about just right there. Think about the time it takes for someone to come to your website. They may stay for 3 seconds. They may stay for 3 minutes. They may stay for 30 minutes, but they came to your website, and they came to your website looking for something, trying to find a solution to a problem. And it could be again, like you said, whatever that lead generation magnet is. Maybe they're trying to figure out how to analyze deals and they want that free deal analyzer. Maybe they're still looking at a book. So whatever that thing is, they've come to your website looking for something. And a lot of the times people don't have either, they don't have the right material there for them. They don't have the answer set up, or the people find what they're looking for. And then you don't have another conversation. Picture this like dating, right? You meet a girl or you meet, a significant other, someone, and there's an attraction there, and you never ask for a number, email, social media, nothing. You just leave. Well, you're never going to see that person again. That's it. You have to, engage in a conversation and exchange of contact info to then, and you use the word nurture, which is spot on. You have to nurture a relationship. That person may not be ready to invest today. I think the other mistake people make is, you get somebody's email and you automatically try to see if you can get them on your investor list. And some folks aren't there yet. They may have just been thinking about, what multifamily is because they've heard nothing about stocks, and maybe they went to a book, a meeting, or maybe they read a book, or they heard somebody talk about a podcast and they just started Googling and somehow came across you. So I think, asking for the sale or asking to get married, when you just met 3 minutes ago is a little premature. So you do want to set up that sequence where you can engage. So Mike, you just gave really phenomenal, powerful information that I think anyone who's currently raising money for deals, whether you're at the beginning stages or you've been actively doing it, you can take this information and use it to refine your process. The last piece I want to hit on that you talked about was the automations, right? Because the thing is, as you start talking about a lot of emails, a lot of lead generation, there's a lot of writing and creation in what you're talking about. And I think the automation is key to help cut down on that time. But nonetheless, there does sound like a lot of work that needs to happen up front. Talk to us more about how we can be efficient in kind of creating these materials without necessarily having to become the best writer on the planet.
Yeah, I mean, there's two issues, right? When people say it's like, oh my gosh, I'm so excited. Let's get cracking on this. And then they start thinking that, and of course, then you have limiting beliefs come in your mind. You're like, oh no, I can't do that. Well, why can't you do it? Well, I'm not a writer. I'm not a technology guy. I play golf, and so they get caught up in these things when, again, it's one of those things that is a limiting belief because you don't have to be a great writer and you don't have to be a great technologist. I think let's separate. Technology is one thing. Technology now is so powerful, so easy to use. You can do so many things that you couldn't do even 6 years ago. That was very low level, require some kind of programming or scripting of some sort. The technology now is extremely visual. And it's a lot easier to use. So that's number one, is the technology actually is not nearly as hard as you think it might. And every piece of technology has incredible tutorials. And I've talked to a lot of these people who said they're not technologists. And really what it is they're lazy. They're not open-minded. They're like, technology, bad. No. Oh, no, I can't do that. Well, I have an idea. Why don't you watch this 2-minute video and do that in the video? Oh, no, I can't. Why can't you watch a video and do that in the video, right? So they can, of course. And they watch this video and all of a sudden they create a list in ActiveCampaign. Oh my gosh, you just created a new list. Oh, did I just do that? Yeah, you did it. It's actually much easier than you think. All you gotta do is be open to the idea. So number one, it's actually easier than people think. And number two, you can outsource. And this is, again, a recent phenomenon where you can hire extremely qualified people overseas that are very technical and can do almost everything that you want. So two things. One is you could do it yourself if you wanted to. And number two, you can outsource it in an unbelievably affordable way. So that's technology, right? It's actually much more in people's grasp than we think. And then with regards to writing, so again, writing is one of those things where, again, you can outsource a lot of the writing. So if you're not a writer, for example, you can actually hire an editor to actually edit a piece. But if for people who don't love writing, there's other ways to do it. For example, you can speak into your phone or record a video. I'm going to ask you a question, and you're a subject matter expert on whatever it is. How do you invest with your IRA? And you're like, well, I can tell you that. Well, then go ahead and tell me. Just speak into this mic right now. And you're like, well, here's how you do it, blah, 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 blah. Then you can take the audio and you're going to get a transcript from that on rev.com, REVV.com. And now you actually have the written equivalent of that. And then all you got to do is clean it up. A lot of people have trouble staring at the blank page. They can't get going. Well, there you go. Problem solved. There's a full page of stuff. And then you can edit it. And here's the thing. Even if it's not perfect, who cares? Okay, it's your words. You're communicating with people. You're going to laugh at yourself a year from now. You look at this garbage that you put out a year ago, like, oh my gosh, look at me on that video. I look ridiculous. Look at the camera I was using. Oh my, and that microphone, holy moly. But you can drive yourself crazy by being a perfectionist. And so what we're teaching our people is just do the best you can, but do it. Don't get stuck with, I'm not worthy. I'm not a writer. I'm not a YouTuber. Like, don't do that. Just do the best you can. And there's very easy ways for people to actually produce content in ways that they didn't maybe think it was possible.
Yeah, and I think the big thing you hit on is you just got to take action. If this is what your goal is, you have to take action. Figure it out, whatever the obstacle is, start overcoming it. I love the tip you gave, and it's very simple. Just take your phone. All of our phones have cameras, microphones on there, recorders. Just record into your phone if that's an easier way to do it. If you're trying to write and you have different thoughts, you just record in there. The other thing is you can also go bite size, right? You don't have to write these long, 2,000, 3,000 word blog posts. You can, with social media, especially with LinkedIn and Instagram and Twitter, you can create content on those platforms and just talk about answering questions or things like that and push that out as content. So there are a lot of different ways to create content, and you don't have to necessarily be a great writer or great on video or any of that kind of stuff. You just really have to find a way to let people get to know you. I think that's the biggest point, is demonstrate your knowledge, connect with people, let them get to know you, and build from there. Michael, you gave a lot of great tips here. I want to move on to our bullseye round. You ready?
I don't know. We'll see.
This one you've kind of answered already, but I'll ask it again just to see if you have any additional context. But how has a failure or an apparent failure set you up for later success?
Yeah, I learned a lot in the dark days of restaurant, and I've had multiple failures, not only with restaurants, but a house flip gone bad, apartment building gone bad. And really what I learned is several things. One is I'm not in control, right? Someone else is. And as a control freak, that is a hard lesson to learn. But when you do accept that, what it does is lesson number 2 is to learn to be at peace regardless of what the circumstances. And therefore, I have the ability to remain relatively calm, even though the crap is hitting it's just all around me. And so this actually makes me stronger in a way. I can deal with stress a lot more. And the other thing I learned is it's not about me, right? And that this was really this lesson I learned from the depths of my early quest of financial freedom. It was really, really all about me until I shifted and realized, I actually have something to share with people. I can actually maybe help people. And that's when I went to start blogging. And it kind of shifted there. It went from, financial apparent failure and misery to, more abundance, I guess. And maybe it had something to do with it. I don't know. Maybe it did. But those are some of the things I learned.
All right. Outside of your book, Financial Freedom with Real Estate Investing, which we will absolutely link to, what is the book you've recommended or gifted the most in the last year?
There's a couple of books by Hal Elrod I really love. I recommend a lot. Hal Elrod, his original book, The Miracle Morning, talks about the morning routine, which has made material difference for me. And he recently put out a second book called The Miracle Equation, which is equally powerful, which talks about a new way of setting goals in a way that you can't fail. And it was fabulously done. So those two. And then the other one is The One Thing by Gary Keller. So let's see. Yeah, that about rounds it out. There's a few more, but those three
great books right there you gave. It's good. All right. Give me a digital or mobile resource you recommend for your business.
Oh my gosh. I don't know. John, there are so many. Oh my gosh.
You gave us rev.com already. So that was
rev.com. Oh my gosh. There's so many. We are technology freaks, right? We're using technology. I don't even know where to start. You also
said Active Campaign. So you gave us Active Campaign and Rev already.
Active Campaign. Oh my gosh. I don't even know where to start. So for Gmail, definitely Boomerang. Boomerang is awesome. Because it allows you to, if someone doesn't respond to an email, it kind of brings it back and says, hey, this knucklehead didn't respond to you. I just discovered something called Bonjoro, Bonjoro, which allows you to create custom video messages to people. So in your environment, so whatever ecosystem it is, and you want to send them a quick custom email or greeting. So my peers or my friends or certain customers, that's kind of pretty cool. So I'm playing around with that. Oh my gosh, so many. I could have an entire episode on technology, dude.
No, I love it. Those are some great ones you gave us there. All right. You mentioned Hal Elrod's book, The Miracle Morning, but what are some of the daily habits that you use to stay focused on your goals?
Yeah, the Miracle Morning, certainly one, for sure. And then the one thing is the other, right? So the Miracle Morning allows you to get clarity. Talked about it. Clarity is super key. Clarity about everything. Clarity about how you are, what you want, what you don't want. Clarity about your relationships. Clarity about what's important, what your goals are. And then the one thing really helps you kind of, schedule it. It helps you basically do those things that you identified as important. So I block time on Tuesdays and Thursday mornings. There's no phone calls, no emails. It's just, deep work time.
What's one thing you know now that you wish you knew when you were starting out?
Oh my gosh, get right into multifamily. Skip the restaurants, skip the houses, skip basically everything else, and get right into multifamily, either actively or passively. Oh my gosh.
What's one thing you know now that you wish you knew 12 months ago?
The power of the online platform, for sure. Yeah.
What advice would you give to a smart-driven college student about the real world?
It would probably be to be clear about what you want. And the criticism I hear is that, my brain, I'm so young, my brain is only half developed. I can't possibly think about what I want. And I call BS on that. I think the challenge I have for young people is to be clear about what they really want in life, and not for the rest of their life, but maybe for the next 5 years. And those plans may be college, it may not be college. If you're going to be an investor or an entrepreneur, college may not be in the cards, even though your parents and friends that's what they're telling you. And then really explore things really pay attention to things that light you up, that you're passionate about, and read books about them, talk to people on that, maybe do an internship to get you clarity maybe about that activity.
What are you curious about right now?
I am curious. Let's see. Oh my gosh, I'm constantly curious about things, but I'm curious about motivation, right? I'm curious about why people take action and are successful, and why people do not. So I'm just curious about that. It's like psychology and I can use that to possibly motivate people to take action, right? Because if I can't do that, if I can't motivate someone to take action, my ability to help you is going to be limited. So figuring out what makes someone tick and what motivates someone is something I'm curious about.
Mike, where are you located right now?
I'm in Northern Virginia, outside of Washington, D.C.
All right. Give me the best place to grab a bite in your city.
Oh my gosh, in my city. I'm in the suburbs. I'm not even in the city. It's I don't know.
Give me a restaurant you like.
I don't know. What's a good restaurant? This Japanese steakhouse. I don't know what it's called. Sakura, I think. We were there the other day. It's fabulous. They throw the shrimp at you. That's a good restaurant. You got to catch it with your mouth.
All right. Well,
I'm not a foodie, as you can tell. I am on a seafood diet. I see food and I eat it. So,
I love it. Michael, you've given us so many great nuggets today. I really appreciate you being open and sharing so much information. I know that you have a couple different platforms, but what is the best way for our listeners to get in touch with you and to learn more about what you're working on and how you can teach them?
Yeah, the website is The Michael Blank. It's Blank. It's spelled blank and pronounced funny. So that's the website. The book is that yellow book, Financial Freedom with Real Estate Investing. That's a great entry point into the world of multifamily to see if it's something that people consider. And on the platform stuff, I have given a training and I recorded it, and that's at if you text platforms to 44222. So platforms to 44222. I'll send you a link, and it's a free training where I kind of cover what I cover, but I go much deeper. So I'll actually show you the technology pieces and the automations that are in place. It's something I did for an internal group, and that might be interesting given this discussion.
Absolutely. Well, Michael, listen, lots of great information on this episode. I genuinely appreciate you coming on the show and sharing so much wisdom with our audience today. Thank you again for coming on Target Market Insights, and we hope you have a great day.
Thanks, John.